Awesome. We are live. Assalamualaikum warahmatullahi wabarakatuh. Good Thursday morning and happy Teachers Day in advance. Today we've got something special lined up for you. Now, you guys know us for doing market outlooks. You guys know us for doing hot stock picks. You guys know us for doing so much more. But Adi and I had a good long discussion and we decided, hey, we want to give back more to you. We are going to be talking about investing skills. So right before we go into it, my name is Afiq, Chief Finance Agent of Fast Free Finance, co-founder at Halal Investing Network, and this is my awesome buddy.
Hi, RD here from Halal Investing Network as well as Pro Traders Network. Together with Afiq, we deliver good content nearly every day.
Inshallah. And so today I am proud to announce the first episode of Halal Stock Hunters, Investing Skills. The best way to invest is in yourself. So first video, we're going to just talk really quickly. Fundamentals. What exactly are stocks, shares, and equities? The shortest answer I can give you is a stock and a share and an equity are roughly the same thing. They're just a part of a company. So if you know anything about stocks that are being traded on the different exchanges, whether it's in the US markets, the Singapore markets, or whatever, you have these companies that are on the exchange. And now, how do you get, a company does well, it goes up in value. How do you get into that action? You buy shares or stocks or equities. In this case, they are interchangeable. So you buy a particular share, a small part of that share, and then you get to enjoy the performance of that particular company. So let us know in the comments below whether that makes sense. Second question to, of course, answer is, now you know what a stock is, how the heck do you actually pick a stock? So this is where I'm going to throw it to Adi. I have a framework myself, but I want to listen to what my good friend has to say.
How do you pick a stock? Okay, basically, Afiq, there are, in my understanding, right, basically there are main two types of investors. One that basically just go by technical analysis. They just look at the price and then they see that, okay, this stock has actually, is going up, the trend is up, and then they see at which level they would like to actually enter the price, enter the stock, buy the stock at what price based on charts, right? So these are called guys who actually are called technical traders, right? They buy and sell based on what they see on the charts. Then there is another group of people who look at the fundamentals of the stock. That means they are looking at what is this particular company doing, okay? What kind of product is it actually producing and offering, services and that is offering, and they look at also the balance sheet of that company, whether it's financially healthy, whether they have a lot of surplus, in terms of debt, do they have a lot of debt? Some companies, are making profits, but they also have to service a lot of debt. That means they have a lot of, they take up a lot of loans from the banks and they need to pay off these loans. So these kind of companies, at the end of the day, you look at their profitability. Yes, they are profitable, but if it goes back to paying loans, then basically that's going to question mark. That's going to be a problem, right? So these are some of the issues that I think, right, that you guys out there might want to know. If, let's say, someone comes to you and says that they're investing in stocks, then you might want to ask them, are they a technical trader, investor, or are they actually doing it based on fundamentals, looking at the health of the company, whether there is a moat around it, that it means that their services and their products are unique, right? So is the branding up there, right? So anybody can come out and actually just sell shoes, but it's not the same as a Nike shoe, right? A Nike shoe, there's branding, and that brand has grown to become a giant, and everybody knows about Nike, nearly everyone, right? And people are willing to fork out thousands of dollars even for a pair of shoes.
Especially collectibles.
Correct, and they're collectibles, right? So these are the kind of questions that you want to ask if you are actually investing in a company based on fundamentals. Am I right to say that, Afiq?
Absolutely. So today, thank you so much for all that, Adi. I really appreciate it because it's going to add to my own framework. So I have a set of questions I tend to ask when we look at stocks, right? And we look at companies. the word value will come up a lot. And so if you've got a piece of paper and a pen, just write all these things down. So it's going to help you. And well, we are on Facebook and you can always, and YouTube, and so you can go back and forth. But the first question I always ask is this: is the company Sharia compliant or halal? We are in the Halal Investing Network, right? We use a screener. What exactly is a screener? A screener is an app or a software that, helps you determine if a particular stock or share is Sharia compliant. Now, I'm going to reserve that for another video where we review some of the screeners that we personally have used. But I want to share with you today the kinds of questions that I ask that are used as a framework. Now, it's going to be easy and back and forth between me and Adi, so do pay attention. First question is, do you understand the value that this particular company creates? Now, Warren Buffett said this: if he doesn't invest in companies he doesn't understand, much less asset classes that he doesn't understand. So if you are looking at a company, do you understand the value it creates? Adi, what do you think?
Definitely. If you're talking about value, right, then the person that comes to my mind is Warren Buffett, right? He talks about value investing, right? And at one point when people were all investing in technology stocks, he was investing in railway stocks, right? So it's like a big question mark. Why not go into something that is really trending, and technology plays at that point of time was very popular. But no, he was investing in Coca-Cola, So those kind of old traditional stocks.
Yeah.
And if you were to actually read his books on value investing, so basically he looks at the value that this particular company would give and whether that value would be appreciated over the long term. So that's the question. It's not just about value, because any company can actually produce value, even a new startup. But for any company that can produce, give value over the long period of time, and that's the issue here.
Correct. Absolutely. I mean, you're absolutely right. 97% of startups fail in the first couple of years. And the question is, of course, they can generate value. We all can see value. But the next question in my framework is this: is the value they're creating beneficial to the world? Think about it. Is the value they create beneficial to the world? I'm certain we can think of some very easy examples of companies that create value that benefits the world. Adi, what do you think?
Of course, I think most of the companies that are public listed are basically companies that have a track record, right? They have a track record, and that's the reason why they are listed. And if they have been listed for a long time on the stock market, that means they have basically passed quite a number of hurdles, right? So those are the kind of things that we want to see. But even then, there's also a lot of other things to look out for, not just because they are listed, we want to be investing in them. Right, Afiq?
Absolutely. I mean, if the value doesn't benefit the world, they're not going to survive long enough to be listed on the stock market. So, and on that note, if the value is beneficial to the world, does the world want that value in the first place? I remember this particular company a long time ago. Have you all heard of Kodak? Right, Kodak, the film picture company, right, photography company. Did you know that Kodak, if you read the history, were the first company to create a digital camera? Digital camera way back in the 50s, if I'm not mistaken, right? And they decided, nah, the world doesn't want it. They don't need it. It's too advanced. And they tabled it. Where's Kodak now? Right, at that point, they were way ahead of their time. But fast forward 10, 20 years later, digital cameras were like, hey, it's the most fancy piece of tech that everybody needed, right? And so when I look at that, for example, with Kodak, does the world want its value? Another example I can think, I can't remember the company name, but they made the first, was it Microsoft who made the first PDA?
If I'm not wrong.
Right, the PDA, the touchscreen thing, long time ago. I remember playing with one in the 90s or early 2000s, a PDA, which was way before mobile phones, before smartphones and all that. A PDA, right? It had no internet connectivity. It was just a personal digital assistant. Right? Now, at that point, the technology had not caught up. Did the world really want it? I mean, I saw great value to having, a digital, assistant, but did the world want it at that point? It was expensive, it was clunky, not really. But fast forward to today, your PDAs are your mobile phones, right? And on that note, does the public love the company? If you talk about mobile phones, what are the names that we always come up? Adi, what are the names that we always come up?
Mobile phones, of course, you talk about Samsung, Apple, Huawei.
Right. And absolutely, the branding of Apple is on point. Right? If you own an Apple product, not even just the phone, but if you own an Apple product, people see you as cool, as hip, Of course, some people on the other end of the spectrum might say, you're a sheep buying Apples.
Also, Afiq, do you know about IBM?
Oh yes, IBM. Oh, so many stories about IBM.
Okay, so you know about IBM. IBM basically makes PCs at one point, laptops, right? But now you don't hear the word IBM as representing all these products anymore, right? But do you know that they are a 109-year-old company?
Yep.
Okay. So they had about 109 years of a colorful history, and they were the pioneers, basically on a lot of technologies, even accused of actually providing equipment to the Nazis during the Second World War.
I remember the history, yes.
So basically, this company right now is still there listed on the stock market, right? But they are now actually servicing their corporate clients mainly. And this is one of the things that we need to discuss also. The fact that value is dynamic. That means you could actually be doing, these companies, right? They can actually shift from providing value in one area and then shifting to another. It's quite dynamic, and they innovate as well. So this is something that as an investor, when you talk about value, you need to also, you need to constantly read up and understand what these companies are doing and where they are going towards. So because it will affect the bottom line and as well as the share price.
Yep. And we're going to talk about all those companies that didn't manage to pivot. One of the most famous ones is Nokia. Who is a Nokia phone now? What's a Nokia phone? What? And on that note, right, the next question in my framework is this. We love the company. They love the product. But does the product that supposedly delivers this value, does it even exist? Now, the reason I bring this up is this. There was a article in the news that came up. I was reading about somebody called Elizabeth Holmes, the founder of Theranos. Have you heard of Theranos? Right. So, if those of you have no idea, Theranos is a company that supposedly had a blood test kit that only needed one drop of blood to be able to tell you everything that was right or wrong with this person. It was like a single drop blood test that could detect anything and everything. That was the value that they were selling. And that particular company, in fact, went up to $9 billion in valuation. Now, why is it interesting? It was all a scam. Thing didn't exist. The head honcho Elizabeth Holmes is currently on trial. For fraud. And so one of the questions in the framework should be this. Yes, we love the company. Yeah, it sounds good. But does it actually exist? Have you heard of similar stories?
Yeah, I've actually, Elizabeth Holmes, basically, I watched a documentary on Netflix. And basically, she was like the darling of the market. And everyone was like really looking up to her, this lady with a deep voice. Kind of like masculine actually to a certain extent. And yeah, her company basically grew, but eventually it was found that there was no product at all that is viable. We're talking about a viable product, a viable service. So you can always be talking about, okay, we're going to do this, going to do that. Okay, the concept is nice, in theory it sounds good, but there's no viable product. So it's actually a company built on hype. So that's an issue that, as an investor, you need to also be careful of. Because too much hype can, yes, boost the price of the company up, but at the end of the day, not much value. So the bottom line and the balance sheet at the end won't show that value, and that's it. Then you are just basically investing in a shell.
Yeah. And something similar happened with Tesla a long time ago. Remember when Tesla said, we're going to make electric vehicles, blah, blah, blah. And for the longest time, they weren't profitable. They couldn't even meet demand. And people were like, is this real? Are they just going to fold one day and go bankrupt? They can't fulfill orders. But look at where Tesla is today. Right? The next question on my framework is actually this. Do you personally want that product or value that that company creates? I mean, if I talk about Tesla, hey, I want a Tesla. Not because I like to drive around with it, but because it's a cool gadget, right? It's an electric car that drives for you, that drives you all over. You don't have to do anything. You even play games on the car. You can sleep and you still get there. Right, Adi, do you want a Tesla?
Yeah, of course, definitely. And most of us like an EV, right?
Right.
Vehicle.
Right, it's like a big boy toy. I totally want one. And so would I invest in that particular company? Of course, because I like and I want that value. And then on that note, just because I want it, just because Adi wants it, the next question in the framework becomes, is demand for that particular value growing? Does it make sense if Adi and I are the only two people who want a Tesla, right?
That's a very good question, Afiq, because at the end of the day, what does the majority of investors feel about that company? That is very important. It's not just about you and me. Even since we like that company, we like the car, therefore we should be buying. That, I think, is very emotional. That means you are investing, following your emotions, right? Just because you play games on Facebook and Zynga is basically one of the companies that's listed and making those games. Since I'm playing the game, so everybody must be playing the game. It doesn't work that way, right? So I've heard of a story where this guy basically he plays Zynga games, and suddenly the next day he decided to pump in about maybe $20,000 worth of his money in Zynga, and then because of the bad earnings report, the price of the share plunged. So that's the thing. You can't just buy a company just because you just bought an Apple phone, and then you decide to actually, okay, since I'm buying an Apple phone, this is a great phone, I want to be investing in Apple.
Yeah, I have met people like that. I've met people who say, I consume their products, so I'll buy their stocks, because I believe in them. But come on, let's be absolutely objective about this. So you want to see whether their demand for their products is growing. And on that note, right, the next question in my framework is this. Yes, they create value. Yes, there is demand. But is that value still relevant to where the world is going? Right? Think about it this way. The what do you call that thing? There was this particular kind. I can't remember what they were creating. Okay, let's use an older example. Film. I used Kodak earlier. How many of you have seen a film camera now? When was the last time you saw a roll of film? When?
It's a long time. Because this people now just use digital cameras, right?
And that's the thing. The world is going towards digitization, electronic. Everything is digital, right? And Kodak back then couldn't pivot fast enough, right? Just because, and I still have friends. You probably know somebody who knows somebody who still are those hipster people who I still use a traditional film camera simply because it's cool, right? Or Polaroids. For some strange reason, Polaroids are still alive. Right? Polaroids are still alive. Take a picture, it comes out. For those of you young ones who have no idea what a Polaroid is, go and Google it. It's an instant camera. Instant, right?
But there's one particular innovation, Nafi, that was created by a big company. We're not talking about a small company here, and was discontinued. Okay, the Google Glass. Have you heard of the Google Glass?
Oh my God, yes. I wanted one for the longest time.
Okay, Google Glass was basically announced and released in 2012. And what is it? It's basically wearable technology where you have your smartphone capabilities on your glass. Okay, but after 2 years of disappointing sales, Google decided to discontinue this technology, and basically it's something that's basically put at the backseat.
Oh my God, yes. But on that note, right? If we look at it this way, where the world is going, we're looking at augmented reality. We're looking at virtual reality, right? Back then in 2012, was the world ready for Google Glass? I don't think they were.
No, they were not. Definitely.
Right? You and I want one now. I want one now. But moving forward, now, for example, my kids' books use augmented reality. Right? They use your phone, you use an app, and then you scan that picture, and then the animal comes out and starts moving around. Augmented reality. And so, is it relevant to where the world is going? I think now more than ever. I hope it comes back.
It might come back, it might, because people are now used to actually using smartphones and they already know that what a smartphone can do. So now it's about having it on your face, right?
Yeah. And the next question to that, right? If you're talking about Google Glass, the next question in my framework is this. Does a large part of the world want that value? Do they actually want it? Because it's fine. It's not enough to just say, oh, we've got a small culture of people who like this, a small group of people who just want this, and they are our niche customers. But look, we're investing. So if you want to invest in a company, you want to make sure that the stuff they produce is high in demand, that most of the world wants it. Right? Can you think of any examples? I can think of a few.
I think at this point in time, basically people are going after stuff which they are, first of all, there's already a perceived value among the collectors, like the Nike shoes I mentioned to you, Adidas shoes, right? So even, okay, there's one particular product which I'm actually I find it very interesting. I don't know whether you have found, you know about the brand Supreme.
Ooh, yes.
Yeah. So a Supreme t-shirt can cost over $100. Right, and even a simple waste paper basket can cost hundreds of dollars, and their hoodies cost maybe even thousands. So it's a similar product to something that's Nike or Adidas or any other sports brand is actually producing, but somehow because of that brand, people actually are willing to spend on that particular product. So this goes back to stocks that are basically dealing in luxury goods, for example, like LV. Basically, all those Gucci kind of brands. So these are, I mean, these kind of companies, their stocks are on the stock market, right? They are publicly listed. So these are strong brands, right? But having said that, Afiq, you know that Coca-Cola, right? Basically, is one of the top soda brands.
The top?
Oh, it's the top, right? You go into McDonald's, you have Coca-Cola and all that. But do you know that in 1985, they came out because of their dwindling sales, because they were losing to their market share to Pepsi Cola. They came out with this Coke called New Coke.
Yes, I remember. Yes.
Okay. So, but it was the greatest flops of all time.
Yes.
It's actually a reintroduction of an older formula rebranded as New Coke, but at the end of the day, they decided to put it aside and turn it into Coca-Cola Classic. So, you see, so companies will always try to actually present new things as well, but it sometimes works, but sometimes it doesn't. Yeah. So that's the risk in investing, That's the risk in investing. When, like when Steve Jobs passed away, right? People were also wondering, would Apple still be the same after Steve Jobs? What do you think of it?
Then that's a very, very good question, right? If the head honcho is gone, will it continue to be profitable? And that fits very nicely into my next question in my framework. Is there a ready captive market? If we talk about Apple, we talk about Coke, we talk about Nike, these companies have their stark raving fans who will do nothing else except consume those products. My wife loves Coca-Cola. It's like she doesn't drink almost anything else except Coke. I'm like, it's going to give you diabetes. but she loves Coke. She loves Coke. What can I say? Right? And I have friends who die. I will only buy an Apple iPhone, like iPhone 5, 6, 7, 8. And I'm like, isn't it the same thing? 10, 11, they're the same Apple thing. But is there a ready captive market? Right? So we call these, when we look at companies like this, and that you know that there is a huge base of people who will just continue consuming that particular company's products, I think it's a yes. So all the questions I've mentioned over the past 10, 15 minutes are all what we call qualifiers. If the answer is yes, that's good. The more yeses it has, then the better the chances of the company growing. But so let's go into the two questions which I find are disqualifiers, right? Disqualifiers, where if the answer is yes, drop it like a hot potato, right? In this case, a disqualifier is the answer you want to go for is no. And so the first question in my disqualifiers are, is the value that this company creating, is the value easy to copy? Let's argue that, right? If we look at things that are easy to copy, let's look at some of the big names out there. We're talking about phones, Apple phones. Is it easy to copy an iPhone? Am I frozen, Adi?
Yep.
Oh, there you go. So the question is the value easy to copy? So if the answer to that question is no, it is not easy to copy, then hey, that's a fantastic company that you might want to look at. Think about it. How many of you can let's look at, we talk about Nike, sporting wear. Are there lots of sporting goods out there? Absolutely. Yes, there are. Many, many brands. But is the value, and when we say value, it doesn't just mean the product itself. It comes along associated with so many other things. For example, if a person wears something from Nike versus something from Adidas or Reebok. Reebok has been coming back over the past few years, right? That feel, that luxury feel, that brand, that camaraderie, that association of using a Nike product. Is it that easy to copy? I don't think so. What do you think, Adi?
I think if you talk about history and branding, it's not easy to copy because that really differentiates that particular company from all its competitors. And it's about recognizability, right? If you actually look at a shoe, there's a Nike, that's an Adidas, you recognize those shoes. And they have been actually pumping in millions, if not billions of dollars into the marketing and the branding. And this kind of work basically goes over years and years and years, right? And it actually causes basic people to actually be ingrained with their brand inside, right? Hold on, Afiq.
No worries. I'm going to go into the next and last question in our framework. This question is you got to have a bit of technical knowledge, but is the monetization of that particular company easy to copy? How they monetize their value? So this one, usually we look at, I like to look at tech companies. I like to look at tech companies and how they monetize their services. If their services are not easy to copy, then it's a yes for me. But if the monetization is just super easy to copy and they can copy that value, then for me, it's a big no. Right? Can you think of anything that, that's hard to copy their monetization? Adi, what do you say?
Okay, I want to share something. When you talk about copying, right?
Yeah.
I want to share something with you. Basically, it reminded me of social networks, right? So before Facebook, we had Friendster and we had MySpace. MySpace was bought by Yahoo in the tunes of millions, right? And after that, we don't know what actually happened to MySpace. It's gone off the radar. And right now, I don't think a lot of the younger people actually remember MySpace even. And then after MySpace, at that point in time, we had Friendster, and also Friendster didn't actually, it was popular at one point of time in Singapore. I was in my mid-20s at that point in time. I think early 20s when Friendster was popular. But the problem with Friendster was that the American citizens didn't actually take up to Friendster. Actually, a lot more Filipinos went into Friendster, and so they couldn't actually monetize that brand. But when you talk about copying, right? Or rather trying to compete, is Google Plus. Right? Yeah. So if you can remember, Afiq, Google Plus was introduced in 2011, right? What is it? Basically a social media site, right? They did pump tons of money, to actually advertise Google Plus. They got a lot of people actually a surge in subscribers. But by April 2015, Google Plus had experienced a 98% decline in user engagement.
Oh, damn.
And that's it. After that, Google said, okay, let's wrap up. Pap, roti prata, bungkus satu, tolak tepi, and that's it. They decided not to actually, put too much money in Google Plus. And now Facebook is still flourishing. Yeah, people are still actually on Facebook, and ads are still being spent on Facebook.
Yeah. Is their monetization easy to copy? I would say heck no. Heck no. So Facebook's monetization strategy is clearly very well differentiated. And so that's the last question in our framework. Is the monetization easy to copy? Now, if you've been following us throughout this whole session today, let us know in the comments below, what are some of the other questions you tend to ask before you decide to invest in a specific company? So this is the first segment or the first episode of Fundamentals Investing Skills. The best way to invest is to invest in yourself. So let us know in the comments below what you think. We try to reply to every comment. And if you can, like, share, comment, and please, for all of us involved, subscribe. Let us know what you want to learn. This is Afiq, Chief Finance Ninja, and that is
RD Halal Investing Network signing out.
Have a fantastic, fuss-free day. We do it just for you.